Hello, my fellow investors, and welcome back to another dividend update video. I know what you guys are saying. It's not the end of May yet. We do still have a few more days. However, I just took a look at my portfolio and I realized that actually all my dividends are already accounted for, so may as well just do this now, seeing that I did forget to put out a video today at 4 p.m. So, you know what? Let's put out a video that you guys actually do like to see. That it's really rare on the channel to do it once a month. So let's cover, guys, the dividends update when it comes to this portfolio. On top of that, I also want to take a look at all the buys that I did and, of course, the options premiums as well. So, with that said, guys, let's get started with this video. So let's get started with my buys for the month. Now, I have this filtered so that way it shows all the trades. Unfortunately, this is also showing like all the options that I bought to close and sold to open and expired, but we're going to cover that in just 1 second. Let's take a look at what I bought. So first things first, guys, as you can see here on the first, I did buy some Crocs, 10 shares at $122. And full disclosure, you're going to see a lot more Crocs buys throughout this whole entire month because, well, I did something that, I did something that I think will be very profitable in the future. But we'll get to that when we get to that. On May 2nd, I bought another 5 shares at Crocs at $117.35. You can see here that I'm dollar cost averaging slowly into my Crocs position. Same day, on the 2nd, I bought 19 shares of T-Row at $105. Then on the 3rd, I bought some more Crocs put for 2 shares at $120. On the 4th, I bought some more T-Row, $104, close to $104. On the 5th, I did a couple buys over here. First of all, we did 2 Crocs actually. On the 5th, I did 20 for $112, and on the same day, I did $114 for another 20 shares. On the 10th, I did 1 buy, which was another Crocs put for 40 shares. And I believe at this point, guys, I have reached a total of 100 shares of Crocs. So, yeah, guys, I am actually the proud owner of exactly 100 shares of Crocs. And my reasoning for this is because, well, if you guys have seen my discounted free cash flow on this thing, my numbers are saying that the company should be worth like $300. So I personally do believe that, and we have seen Crocs rip massively, and I kind of want to capitalize on that. I did mention in my goals video for the year that one of them is to start non-dividend positions. And I honestly believe that Crocs, you know, at around like $115, which I believe was my average share price, I think that's a really good price tag, guys, especially seeing that my calculator is telling me like $270 to like $300. So I know that has fallen a lot more as of recently. It's like at around like $105, $107, but still, you know, it is what it is. You can't really predict the future when it comes to this stuff. I personally like buying Crocs with an average share price of around $115. So yes, I am now the proud owner of 100 shares of Crocs, and I will tell you guys what I plan to do with that in just 1 second. So let's continue with this. On the 16th, I did a buy of 10 shares of SCHD at $69.72. Guys, SCHD has just been collapsing a lot recently. Kind of remained at around like the $70 mark, but man, like this thing has fluctuated somewhat down within the past couple days, within the past couple weeks actually. So yeah, I'm definitely capitalizing on this. I am buying a lot more SCHD. Skipping now into May 23rd, I bought some more SCHD at around $70.69 for 8 shares. And also on the 23rd, guys, I bought 2 shares of Amgen. If you guys did not see my stock analysis video on this thing, well, this thing has fallen down a significant amount from the high of like $300 or so. And it's actually reached the price tag that I originally bought it at back in like 2021, I think it was. So I'm capitalizing on this too. Now, if you saw that video, obviously the calculator showed that it should be a lot lower, but I'm like, you know what? I originally bought it at around 221. It's fallen lower, so I may as well just dollar cost average as it continues to fall. So that's my whole thing when it comes to Amgen. You can see I bought 2 shares for $224. On the 24th, I bought some more SCHD for 14 shares at $69.89. You guys can see that I am capitalizing whenever this thing falls sub $70. I'm trying to buy as much as I can. And also on the 24th, I did a few more buys in Amgen. I only bought 1 share. And then UNP, I bought 2 shares. And then Realty Income, This thing, guys, fell under 60, and you know my rule when it comes to realty income: if it's under 60, I'm buying. $59.41 for 9 shares. And as of today, as I'm recording this, the 26th, I bought one more share of Amgen at a price tag of $216.59. So as you guys can see, I have been buying, even though a couple of these, like for example, Amgen, the calculator is telling me that should be a lot lower, but you know, I like to dollar cost average. I really do, because I don't know when this thing's going to go back up, right? What if it decides to rip up before it reaches that price tag? So I am going dollar cost average as much as I can as companies go down, because let's say that if it doesn't reach my exact price, then I miss on that massive gain on the way up. So that's pretty much my game plan when it comes to all of this. And if we actually scroll down here, we can see, I'm actually going to show you guys my 100 shares of Crocs right over here. Now, I am down on this by around $1,000 or so, but this is a very long term kind of hold. In fact, I'm hoping to hold this for about a year, so that way if I do end up selling this thing, then you know what, I may as well get the long-term capital gains when it comes to taxes. So that's the goal on this. In fact, the goal, let's see what happens though. The goal, it is to hold these things, if my calculations are correct, hold this thing up until it gets to around like to $270, $300 or so, and then do an in-the-money covered call and get executed on that call. That way, in the worst case scenario that this stock goes all the way up to $270, if we do 270 minus the $115, which is my average share price, that is a difference of $155. If we multiply this times 100, since there are 100 shares per contract, that is a gain of $15,500. And then add on top of that the premium for an in-the-money covered call, which could be anything between $2,000 to $5,000. That would be, on the lowest side, let's say $2,000, that would be a gain, guys, of $17,500. That's really good. That would actually be my highest gain ever. And seeing that this company does not pay out dividends, I don't really care if it does get taken away from me. Honestly, I really want that gain, which is the reason why I'm going to hold it for a year, so that way I get the long-term capital gains, tax benefits, and then after that, if it has reached the 270 or more, then I'm just going to sell an in-the-money covered call, get the gains, get the premium, and just run like the wind. So that's the whole thing when it comes to Crocs. That's my whole kind of strategy when it comes to buying non-dividend companies. So let's try this out with Crocs. I could have done this with Google, but oh well, it is what it is. I may as well try it with Crocs. I think this company should be worth around $300 or so. So let's jump now into the options premiums, because I have done a few trades here and there when it comes to these option chains. However, honestly, it was not a lot compared to my other months. Now, I do still have 2 open as of what, February 16th, and as of March 14th. One is for Crocs that opened back up in February 16th for Crocs at a strike of $75. So that one will soon be expiring, guys, on June 16th. So I've held this thing for quite some time, 4 months, and it is paying very good right now. I mean, I only got $70 worth, but you know what? It might expire worthless very soon, the way that trajectory is going. And when it comes to Chevron, I still have this one opened. It's going to expire September 15th, so I'm still going for a while, but mainly I sold this one, even though I did not get a lot of premiums. It was mainly for the fact that if Chevron does fall back down to $100, I am buying the hell out of this one, because Chevron, as you guys know, it is my best paying company overall when it comes to capital gains and even that of dividends. But nonetheless, though, let's come over here to the month of March, which is this row over here. Now, I still have one from April open, and that's on Texas Roadhouse, which, by the way, guys, Texas Roadhouse is this company, man, oh my God, this company is nasty. This company is like, honestly, I'm thinking about opening a position with Texas Roadhouse if it falls to like sub 105 or like sub 110, because this company, it goes on a tear, man. This thing is, it goes up massively and it takes forever to come down. So I might actually sell a lot more cash secured puts when it comes to Texas Roadhouse in the future, because that's crazy. So this one is still active, and I did get $172, but this one's mainly for April. Now, the ones that count for the month of May would be this first one, which was a T-row one that expires on June 9th, and the strike, it is at $101. I got paid $1 for it, so the total premiums for this thing, it is $100. That one's still open. This Excel sheet is looking at it as if it expires, i.e. me getting the $100. So if anything changes, I will just populate over here, and then it will do all the stuff, so that way, you know, I can see how much I lost or whatever. Now, on the 10th of May, so you can see that's a very wide gap when I just didn't do anything. On the 10th of May, I sold a Crocs put for June 2nd for a strike of $105. Now, I got paid $157 for this one. However, guys, I ended up buying back as of recently, actually, because, well, just a few days ago, Crocs was sub 100. So you're looking at this and you're like, whoa, you lost what, like $300? Yes, I ended up losing on this one $244.32. However, what I did was actually kind of cool because I noticed that another put for Crocs was literally the exact same ask that the bid was. What I mean by that is that on the same day that I closed this one on the 10th, I opened up another one for the exact same strike. So I rolled it. This is pretty much what's called a roll. I opened up another one, guys, for a premium of, look at this, $400. So I bought it back for $400, right? But then I sold it again for $400. So my credit was zero. I literally just rolled this thing for a much lower strike. As you can see right here, the strike is now $100 as opposed to $105 for now the expiration of June 23rd. So right here, my total gain and loss was zero. Now, I did lose $1.32 when it came to that because of the commission, but honestly, that's not even too bad. Overall, it's still looking really, really solid. But I cannot believe I actually found a Crocs position, a put, for literally the bid was the exact same as the ask. So I bought it back at 400 and then I sold it right again at 400. So that was really, really cool overall. Now, I do still have another Crocs put still open for June 9th, and I opened this on May 6th. For a strike of $100. Again, I got paid $95 for this one. And on the 17th, I opened a covered call for my company Chevron, selling a covered call at a strike of $160. As you can see, it did end the day at $154. So I got paid the total premium of $26. It expired worthless, so I got the total of $26. So as you can see, the month of May wasn't as extravagant as the month of April was, but overall, I still made out with around $374. So not too bad. You know, that, I guess, roll would have been a lot worse, but again, I did manage to roll it for the exact same bid that I sold it for again, so I guess it worked out, right? I guess it worked out. But total of $374 for the month of May in options premiums. And lastly, let's take a look at the dividends, which is the main reason why I'm pretty sure everybody's here. And of course, this is my go-to when it comes to investing. My whole purpose of having this portfolio to begin with is because of dividends. It is the true, at least what I find, one of the truest, most passive ways to make money. As you can see, I don't have anything filled here for May 2023 because I am going to show you guys on Schwab. Schwab does this automatically, so it's really, really cool. Now, you can see here that total, it was $358.56. However, I'm going to have to subtract, guys, the first one when it came to JP Morgan because, well, this one was paid on April 30th, which I believe this was a Sunday. So I am going to exclude this one when it comes to this dividend payment. So starting off, guys, aside from this JP Morgan dividend, on the 1st, starting off real strong with Verizon Communications paid $176.83. Then on the 8th, we got Air Products Chemicals, another company, by the way, that has fallen a decent amount as of recently, $11.10. Then on the 10th, 2 days later, Lowe's paid out $19.95, which, man, when Home Depot had earnings, Lowe's fell a lot. But then when Lowe's had earnings, it went skyrocket to the moon. It was absolutely crazy. Then on the 12th, 2 days later, Clorox paid out $10.62. Procter & Gamble then on the 15th paid out $2.82. On the 15th again, Realty Income paid out $18.69. On the 15th, one more time, AbbVie paid $109.40. On the 18th, Apple gave me $2.13. And lastly, on the 19th, Costco paid out $1.02. So overall, guys, minus the $6, the overall monthly dividend for May 2023, $352.56. Really, really nice. So let's see how this stacks up to the other Mays of 2020, 2021, and 2022. Come over here, guys, to the graphs. We can see that Well, not too shabby. Now remember, May, it is the second month when it comes to the quarter, so we're not going to get the massive spike like we did like in March. But comparing May 2023 to May of 2022, we can see that it is a pretty good increase of a little bit more than $100 or so. Yeah, 234 in May of 2022 to $352.56 in May of 2023. And then compared to May 2021, it was $124.52. And then May of 2020, when I first started, $13.62. Comparing this though to February, which was the second month of Q1 of this year, you can see that in February we got $325.13. So that is a nice increase of around $25 or so, right? Not too bad, $27 to be exact. But yeah, not too shabby overall. You can definitely see this increase as the months and years go by. And next month is going to be absolutely crazy. In fact, if you guys already saw, the investment income when it came to this, guys, this is absolutely crazy. So yeah, it's gonna be looking really, really good. Now, when it comes to the quarterly, we can see that so far as of Q2 2023, up to almost $500. That's absolutely crazy. And again, the quarter, we still have one more month left, and that, man, June is gonna be crazy. Awesome month. On the annual, we're already up to $1,645. So overall, it's just consistently increasing. And of course, if we take a look at the investment income here on Schwab, we can see that right now, as of 2023, it is estimated at almost $5,200 with an average of $432.64 per month. Absolute insanity. And then in the next 12 months, so this is not counting the months that are already passed, but just from June 2023 to May of 2024, this is up, guys, a lot. Like $5,375 for the year and almost $450 average per month. Absolute insanity. And you guys can see here, I'm going to show you a sneak peek, guys. Estimated dividends for June 2023, $833. Dear Lord, that is insane. That is going to be my highest so far. And depending on whether or not I put more money into companies that the dividend hasn't happened yet, man, this thing will just skyrocket even more. So next month, make sure to come back because it is going to be absolutely bonkers. So all in all, as you guys could see, the dividend portfolio is doing really, really good. Options premiums is doing okay. I've made a couple of mistakes here and there, but I'm slowly learning when it comes to that. And when it comes to my overall buys, I am slowly dollar cost averaging if the market falls or if I see companies falling below what the price I originally paid for. So that's kind of the game plan when it comes to this, guys. And hopefully this serves as a pretty good reference for anybody following a similar kind of strategy. So with that said, guys, if you like, comment, subscribe. It really does help her with the algorithm on YouTube. Y'all can follow us to the new tech sites. Link is in the description below. So with that said, peace out, and we'll see you all next time.